thank you very much. And now it gives me great pleasure to host the final session of this extraordinary day. It's a panel discussion. Luckily, you already know the panelists, those who've been tuned in for the whole day. For those who haven't, we have Arvid Moss, who's the Executive Vice President at Hydro. Henriette Undrum, I don't know if I've pronounced that right, I hope so, the VP and Head of the Climate Initiative for Equinor in Norway. Niels Klippenberg, who's the Head of Smart Infrastructure and also the CEO of the Nordics for Siemens. Xavier Chen, who's with Beijing Energy Club. And Helen Curry, Chief Economist at ConocoPhillips. And the topic of this panel is a very important one, could hardly be more important. How do you make money? How can we make sure that energy companies, participants in this transition to net zero, are profitable? Because if they're not profitable, they're not going to invest. And if they're not going to invest, we're not going anywhere. So I'm going to start, Arvid, if I might, with you, because Hydro has been around since 1905. So in the 126 years since you were founded, I'm going to assume that your hydro, your clean energy, has, at least for part of that time, made some money. Is that right?
That's right.
And can you elaborate on how, what lessons can we learn from this? I see that Arvid is being very cautious. He doesn't want to admit just how much money. But it's presumably had a healthy financial history.
Yeah, it has.
And my first question, I guess, is what lessons can we learn from that?
No, I think the lesson learned is probably that those who started that journey took a lot of risk. That's point number one. That was, they didn't know exactly what to use it for. They didn't have the technology to produce fertilizers. They didn't have the land rights to get to the hydropower. And they didn't have the money. So when this was carried out in the end, the startup of Hydro was a combination of foreign capital and very high technology risk. That was the start. And in many ways, when we now go into the new journey of, let's say more renewables, the energy transition, it's also very much about a risk picture out there. There is a technology risk. We need a lot of capital, and we need friends, and we need, let's say, to partner up across the value chain or with different competencies. So if there is something to learn, is really to build new businesses, to scale it up fast. You need a good combination of companies and partnerships between public and private companies. So I think that is if there is any learning in this, and we've seen that also when we built up the oil and gas industry in Norway, it's really to acknowledge that it takes time before you earn money. We have it in sight, but you really need to invest in competence and in equipment to get there. So long answer to your short question.
Well, no, but you've got us off on the right foot, because it's all about risk management.
Yes.
These big changes, they involve risk. They just involve risk. Yeah. And you can minimize the risk, but at some point somebody has to shoulder that risk.
Yes.
And you also segued fantastically into my question to Henriette, which is, okay, so then oil and gas, obviously Equinor also has its foundation myth. In fact, the founder, we were very privileged to have dinner with last night, the founding CEO. But now you've started to shift into clean energy. So those risk management approaches, which led to the founding of Equinor, to what extent does that culture and do those approaches hold with your new clean energy business?
I think it's a lot of learning, and it's a lot about also building up a stepwise approach in this area. And what we have done then, based on the oil and gas history, and then going out into offshore wind, bringing out the competence and bringing out the people and the skills, and bringing also with us the marine competence that we have in Norway, has been a way to do that. And that has also, I think, enabled us to enter into areas and projects quite early, and taking on that risk where not so many other could go. And we see that when you see, for instance, what we have done then with farming down later, that we have had then some good payback for that risk. But you also have to doing that, you will also need to understand that you can't win them all. So that's part of what you need to, but you need to balance it.
Right. And, for the sake of sort of disclosure to the audience, I should mention also that I am on the international advisory group for Equinor. So I've been following with some detail that process of making money from the farming down, from initiating projects, offshore wind, and then selling parts of them, right? That's what you're referring to.
And that's an important part of the business model when you are entering early, to try to see if there are risks that you are maybe capable of taking on, maybe better than others, and then you can capitalize on that ability to take risk.
But now, the businesses are very different. You're in the oil and gas business, the traditional business, and then there's these massive wind projects. And aside from the farming down, let's take that out of the equation, because that's an asset sale, that's a little bit different. They have very different cash flow cycles, very different profitability, very different margins. And I don't think it's a secret, because you've just produced some results, Equinor's just announced some results, that today, the oil and gas business is producing a lot of cash, let's put it that way, a lot of cash, and the renewables business isn't. Does that change? I mean, how do you deal with that?
Yeah, obviously it's a very different game, as you say, and I think it's at the core of what we're discussing today. We are finding a pathway through an energy transition. So then you are not responding to the volatility in the short time period. You have to have a longer perspective when you decide where you will put your investments. And you have to also keep in mind that today we are harvesting from 40, 50 years of investments. We are building on existing infrastructure that enables extremely low cost and low carbon, very, very valuable barrels. While in the renewables business, we are currently in a building up phase. So we are investing a lot into building the necessary positions and scale in order then to have the profitability. But it is very different business, and that's also why what we just touched upon, the ability to create value from being able to handle risk, being able to handle large projects, that's part of the profitability of that game. So the business models are also different. And then on the other hand, you have a very different type of exploration risk before you go to investment. So there is a very different picture, and it has a different value creation model.
Right, and I think that's fascinating, and it could not be a more important discussion. Is it the case that in the long term, these clean energy projects become as profitable as your oil and gas projects, or are they just inherently different and lower profitability? And you can answer, or I can move on and bring in some of our other participants, but that feels to me like a pretty key question.
It's a key question, and I think if you had the answer, I think you could sell it at quite high price.
Well, if anybody would believe me, who knows? But,
I talked about it earlier, about the ability to predict the future. It's quite difficult.
You already know me. I would have many answers, probably conflicting with each other.
Yeah.
Nils, let's bring you in, because you, Siemens, are selling turbines to Equinor and to others who are moving into this clean energy space, and they're not making money, but you presumably are.
Yes, and that's quite enjoyable. But I mean, it's a lot of hard work behind it. So maybe I can answer it with 3 points. And of course, it's a lot of investments going on inside the company. We are using roughly, or a little bit more than 4.5 billion euros every year in R&D, and we are doing that in order to make relevant and high-quality product, services, solutions. So this is one point. The other point is that these funding are actually geared towards decarbonization, energy efficiency, and security of supply. And why is that important? Yeah, because all renewable is by definition weather dependent. And that means it's getting on and off. And that means a lot of dynamics into it. and therefore you need to make sure that you have the security of supply as well. So this is point number 2. And the number 3 is really related to us being, let's say, relevant for the future. That means that we really have to look into the mega trends and understand where the world is going and what is going to happen. And we are coming from a technology perspective, and therefore we like to be ahead of the curve so that we can discuss with politicians or, let's say, framework makers that this is the way to solve that kind of a problem. And in that way stay relevant and, if you like, do what matters and bring value to our customers.
But you're confident that ultimately your clients, as well as yourselves, will achieve the appropriate risk-adjusted returns on capital?
We believe so, but you know, it's a game because, like I said in my presentation as well, we need to kick off because the cost curve is maybe not attractive for the time being, but down the road it will be attractive. And we have seen the same in battery production, in the same with PVs. You know, all these things have started with a high cost. Now it's quite attractive.
Right. And Helen, if I can turn to you, because one of the things that's happening is this switch from commodity, sort of volatility through the commodity cycles, a system which has got a lot of operating expense. So you have to buy your fuel every year, which of course is great for ConocoPhillips. But the global energy system, as it shifts to clean energy, and it could be whether it's renewables, whether it's nuclear, whether it's energy efficiency, even on the demand side, public transport, electric vehicles, it's kind of much more cost up front, and then a less volatile revenue stream. Is that how you? Is that? I mean, first, I guess my first question is: do you agree with that, or is it going to be just? Are we just going to go for a world of volatility all round?
I think it's going to be more of the latter, quite frankly. There will always be volatility. There will always be price volatility unless you're in a market that is just regulated from front to back all the way around. And that's just not what we see around the world. There are certainly isolated examples of markets that are regulated on both the buy side and the sell side. So that's the only kind of circumstance where you're not going to have any volatility. But when I think about energy and things such as electricity in particular, it is inherently volatile, if not only because of weather, which has been mentioned more than once already, because of typical daily cycles of human behaviors and business patterns and so forth. So there will always be some amount of volatility in the system.
I agree there'll be some amount, but if you look at some of these, we're going to get onto the policy mechanisms that will enable profitable projects to be built, but within the electrical system, more and more of the spending is based on sort of ancillary services, you know, the stuff that Niels talked about, keeping the lights on when maybe the wind isn't blowing and so on. And the electricity price per se is a much smaller part of people's costs. The average consumer's costs with this much electricity, and a lot more paying for batteries or interconnections or just big pieces of infrastructure. And doesn't that suggest that because you can swap an interest rate for how many years you want in the future, doesn't that suggest we should see, at least for the consumer, you should see less volatility? So perhaps in the end, perhaps it's an end point.
Once you get past those initial, once you get past the transition, I think your point's valid. Once you get over a certain hump or level to a level of critical mass, then you could potentially see less volatility at the consumer level.
But clearly right now, where we are in the cycle, that's not what's happening. For most consumers, they're seeing now that
it seems to be a long way off.
Xavier, how relevant is this in the Chinese context? China is the largest investor in clean energy solutions on an absolute scale, not per unit, population or GDP, but the largest. Do those investors need to make money? Does profitability matter?
Certainly, profitability matters. I would say, you have to distinguish Chinese renewable or low carbon development in different phases. The first phase is actually the whole entire world help China to develop manufacturing capabilities because all the Chinese solar wind equipment they supply Europe, supply America, supply Australia. So that until I think the financial crisis, before 2008, is all export driven. But then when the financial crisis, the European market, the American market cramped, and then China start to develop domestic capabilities, and with the same mechanism, which is feed-in tariff, PPA. So that and the feed-in tariff on PPA assumes subsidy. So this subsidy for 20 years, and then of course, huge development, and of course the government money, subsidizing it. So today, the government, Chinese government says, if we were able to achieve carbon neutrality, we do not need to import oil or gas, and we can clean up our air. So that's really to the national benefits. So Xi Jinping committed to carbon neutrality, carbon peaking, and that makes this a political mission. This morning, I ended my Q&A with Sophie, saying that there is a decarbonization in the Chinese way. Chinese way of decarbonization is actually you make these targets either to provincial governors, you deliver it, or state-owned companies, you deliver it, you have the targets. Otherwise, your performance assessment will not go. But then state-owned companies, whether they are in coal, oil, and gas, they make money from traditional businesses and then subsidize the renewable energy. Just like many other companies are actually doing that. So can make money, but not so far in renewable energy business yet. It's still either supported by tariff policies by the government or one pocket to another pocket within the same organization.
But is there a discussion about how to move to more market-based mechanisms? Because, or is it just going to remain such a national priority because of the security resilience issues, because of the need to substitute out imports of oil and gas? Is it just going to remain heavily government-dominated indefinitely, or is there a sense of, well, now that the thing has got up to speed, you can start to kind of liberalize the energy markets?
I think, again, different phases. First phase, until now, maybe next 10 years, will be still government heavy-handed. Electricity sector regulation is monopoly, and the government can force targets on power grid companies to do that. But at the same time, they started this emission trading scheme. China launched the emission trading scheme on the 23rd July. 2,500 power plants or companies participate in that. But then the pricing is $7 per ton. And then, of course, all the Chinese power plants, they are based on coal. Technology differentiation is not very big. $7 is not enough to enable changes. So for the moment, the market force is still very weak. Maybe it's a finger compared to an arm. And then later on, this finger will become bigger. And this is really when the market forces need to play a role, you need to liberalize the electricity sector in particular. And this, I think, repeatedly governments sending signals now to liberalize the electricity sector so that market forces can play a role.
So you envisage the carbon price ultimately in China coming up, and then perhaps some of those slightly more heavy-handed approaches maybe being relaxed?
Yeah, I think, really for the carbon price to play a role, China should perhaps align to today's European carbon price level, something like 60 or 70 euro per ton. But then the question is, does it matter? Does it really enabling the fuel mix change in the Chinese context? Can the Chinese economy afford $60 to $70? We do not know yet.
Well, that would certainly make the conversations about carbon border adjustments and carbon border taxes a lot simpler if there was a if there was a matched carbon price. But we shouldn't forget that it was only 3-4 years ago I think 3-4 years ago, that the EU ETS price was only €5, was also only $7.
Yeah.
To what extent has the surging EU ETS price made all of this transition and a profitable transition much easier to envisage? Arvid, I'm looking at you, but Henriette, actually I'm looking at all three of our European clean energy aficionados here.
No, I can start out, but I would like to actually go all the way back to the financial crisis, because I think that the biggest climate initiative ever, to call it that, is actually been the zero interest rates policy since 2009, because all this what happens in new energy is very capital intensive. So we've been able to do all this investment at a much lower capital cost than we would have at the old interest rate level. So when we see that capex has come down and the levelized cost of energy has come down, quite a big part of that is actually lower cost of capital. So we should remember that. It's a good part, good thing coming out of the financial crisis. Huh?
Particularly, we should remember it now, that we're about to have 5%, 4.5%.
Exactly. So it's good that we have come at this some way down the road. But I think, yes, the increase in the CO2 price, ETS price, is very important. It's a signal, and I think that we have all stared at this price now for 15 years, since 2005, and it's been 5, and it's been 20, and down to 5 again, and then started to climb 2-3 years ago, up to the 20s and the 30s, and then, of course, there was very conscious decisions made in the European Union last year. Both with the new targets for 2030 and the market stability reserve, etc., and that tightened the screw even more. So I think all businesses now relate to that. 60 or 50 euro was not a dream; it's reality yesterday, and 100 euro is a planning tool. And that matters.
Right. So when you say it matters, I'm going to push you on the investment committee decisions, because that's, you've got projects, and then I don't know whether you are on the committee or whether you take projects to the investment committee, to your...
Both things, both.
Okay. What carbon price do you assume, and can you assume, because yes, it might be 60 euros today, but it could be 40 tomorrow, it could be 30, or it could be 100. So what do you actually put in the investment decision, in that proposal to the investment committee?
I cannot share that here because we are competitors here. so that price. No, but to put it this way, of course we have a base now CO2 prognosis that we base our investments on, and then we run scenarios around that price. And what I can say,
but it matters.
What I can say, that it jumped substantially up from last year based on what happened during 2020 in Europe. So it is a very clear, let's say, factor into the investments.
Because one of the questions that I've had for a decade or more is whether the carbon price signal gets attenuated in those investment committees. In other words, even if it goes to $100 tomorrow, do you assume $100 or no? You say, well, we'll assume 40, we'll assume whatever. So you'll take some safe margin. Henriette, do you want to comment on how Equinor does it?
This is a key topic, sort of, because I think what we saw also in Europe, and we talked about it before, that at a certain price on ETS, renewables became competitive. And you came to a volume that the combination of an increased CO2 price and a volume made renewables competitive. And we need to find the next levels where you will really sort of signal the change for new industries. I said earlier today that we believe that at an EU ETS price of 100 euros per ton, it will be possible to make CCS, or CO2 capture and storage, to a commercial value chain. What does that mean? It means that we are now saying in our plan that, okay, let's start to work on real assets, real storage assets, so that we can mature them and tell the industries around Europe that this is going to be available. But on the same time, we will be dependent on governments following up on the net zero with the policies to capture, so that really is a long-term solution for industry. And you have to go then to areas where you have large industry clusters, like the Humber area, where you can do big things, because that's when you get the most cost effective. But we need signals that the price will be there, and I think we do exactly what you do. We make a projection. We do that for oil price, for gas price, electricity price, CO2 prices, and then we make the scenarios. And then we try to balance risk. And those are risks. Commodity prices are risks. Steel prices are risks. So we have to balance them all. And then in the investment committee, you will meet some tough questions. And you need some good answers. And you need also maybe a story that comes together. That this could hamper the investment, but we also see that this could help it. And needs to be balanced.
Yeah, and that's a very comprehensive and smart answer. I'm intrigued by the lag. You say at 100 euros you could do CCS.
Yeah.
Okay, but how long does the price have to be 100 before you have the confidence, like, okay, this is the new normal, this is the price? Because that's, and I suppose that's a question in oil and gas. You're both very used to making those calls around oil and gas. Yeah. But with you have a few 100 years of history of what is a spike, what is normal, etc.
Yeah, and I think predicting that kind of prices long term, what we know is that we do miss. We are not able to predict long-term prices. I mean, who could foresee the gas prices? Who could foresee oil prices going up and down the way they have done? So I think that is also why we need to make decisions robust. We need to not be on the borderline of what you can do. So there's a scenario here. There is a span. You have to, and some of these prices, they also are interlinked. So we will have an effect. If one goes up, the other one goes up as well. But to predict and say, well, we have to be absolutely certain for 5 years, it's not going to happen. But we say that with the projection we see now, we think this is, and if we are willing to take a risk to start mature storage licenses, then that will give a signal that this is the solution, and that can also then help governments and help other industries to do their first move, and then maybe we could help each other to progress more quickly.
And Michael, do you have an assumption? Do you also already work in ConocoPhillips with a carbon price sort of scenario?
Doing that. We've done that. We've done that for a number of years now, in fact. But I was wanting to add on to the answers just given here that I think it's important to keep in mind with companies like all of ours that we're making investment decisions on a long-term point of view. So we recognize prices, commodity prices, both on the buy side and the sell side, are going to be volatile, and so we. I speak for myself, and I think others on the panel can chime in, is that our investment decisions are then made on longer-term points of view on a level of prices, recognizing that the day-to-day prices are going to move above and below that. And that's what really drives our investment decisions. And so then part of that is a carbon price. And we run a carbon price through our base case economics. We run a sensitivity cases on our carbon prices, the same as has been described for the other panelists, yes.
So, Niels, you have to build a supply chain. These are your customers, and you have to build a supply chain. What level of certainty around carbon prices or other policy mechanisms do you need in order to do that?
No, I start with the CO2 pricing. I think that will go up because it's kind of a penalty for the conventional systems. So it's like easier to switch, but it doesn't solve the real problem, which is the cost of the new solutions and the new energy systems. So, it's easier to make a selection because the other, let's say, option is also not that good. But, there is a lot of tailwind now, I will say, in the sustainability part, and that means to me that's a lot of green funding out there. And that means that it may be easier to fund this, but again, the business case may be the starting problem. And therefore, I think we need to have some incentives in a way that we actually can kick it off. And if that has not been required, then we had been on the way already. So, the problem is the actual cost for the new systems and the new energy solutions.
Right, but you talked about the investors, you brought them in, and I showed in my remarks that what we've actually seen in the last 8 years is that overall investment in the energy sector has dropped because the fossil fuel investment has gone from around 1.2 trillion per year to 700 billion, and clean energy investment has been flat, also at 700 billion. So overall, investors don't like the energy sector. Overall, they've gone from 1.9 trillion to 1.4 trillion. And so you could say that society has done a good job of telling investors not to invest in fossil, but has not done a good job of pushing the funding into your solutions.
Yeah, but I mean, your figure is obviously right, So, but why is it like that? Most likely because it has been running that way in a good way so far. And now we really need to reinvest and actually make the investments in order to move forward.
So is this current energy price spike, the crunch, is it a wake-up call that will unleash literally what is needed is hundreds of billions per year of incremental investment in clean energy?
I believe that we need to really invest, and that will hurt the society and will hurt every one of us because we have to pay more for it over time.
Arvid, you want to come in?
Yeah, I think this wording call for action. I think that something has really changed over the last 2-3 years, and I think when we start to count figures now in 2-3 years time, let's say what happened from 21 to 23, I think we will see a substantial step up. But because there has taken some time to figure out how should this be done, how does these things combine, and how do we build the systems, and how do we build the partnerships? Because that is what I see now over the last 2-3 years, is that new kind of companies find each other in doing new stuff, and building systems together. So I think that we are now seeing things happening, but it needs to happen fast. I agree with you. And let's say, if we see also now capital be more expensive, which I think it will be, then it will be a very important how then the public sector can come in with the green bonds or guarantees or whatever to de-risk at least some of the capital side. So we have to use all the tools now to get there, but knowing that we need to do this to make it profitable, not to have a continuous subsidy, but to step it up. Huh?
And the money is definitely there, because at the end of the day, I'm smiling already because my punchline is, these are actually, 1 trillion, 2 trillion. These are actually small numbers, given that there's 400 trillion of built-up investment in the capital system overall globally. It's not flowing at the moment into energy, and we'll come back to that. I want to just ask about China. Is there now? You've also got an energy crunch right now in China. We read about the traffic light systems being switched off in some places, and the factories having to go on slow time. Is there a sense of urgency throughout the system at the level of the president down to the provinces and all of those state-owned enterprises that there needs to be a step change difference in clean energy investment, or is there a kind of retreat to fossil energy?
It's quite funny in this part of the moment in the history. Capital of the world, the energy lacks energy. Capital of the world, gas lacks gas. The biggest producer of coal, which is China, lacks coal. That leads to power shortages. So whether there is a step change to accelerate, decarbonization, I would say need to balance a little bit. In the past, in particular over last year, when Xi Jinping announced this carbon peaking, carbon neutrality objective, everybody, or in particular state-owned companies, rushed to announce, we will peak earlier. We will reach neutrality earlier. One gas company even said, we will reach carbon neutrality when the country reaches carbon peaking. But then when you ask him, do you mean Scope 1, Scope 2, or Scope 3? What does it mean? They do not know. So I think now this energy crisis, Chinese are not experiencing its own power shortage. But also look at what happened in Houston, what happened in Europe, what happened in India. This energy security as a constraint for decarbonization is back to the top agenda. That's why Xi Jinping visited an oil field, pronounced this famous word that the rice bowl of energy security, still needs to be firmly held in our own hands. So I think it's not that we will forget about the decarbonization. That is the urgency of climate crisis. That is the benefit of achieving carbon neutrality for the country as a whole. But all these need to be paced, needs to be balanced. So the Chinese reflection on this is actually climate change. Tackling climate change is a balancing act. It's not just one-sided to do everything, stop everything.
Right, and certainly going back to my remarks earlier today, it's hard to be optimistic about 1.5 degrees given that balancing act.
Yeah.
But coming out of the COVID crisis, there was a lot of talk about build back better, and there was a real push to say, okay, we've got a crisis, money has to be spent, let's make sure it's consistent with climate action. And actually that wasn't very successfully done. Most of the money that was spent, in a sense, climate blind. Now we've got an energy crunch in Europe. Are we just going to do the same? Just spend the money climate blind? Or are we really going to use this moment to push ahead with the transition to clean? And if so, what mechanisms does that require? Because the carbon price will now do what it's going to do for the next couple of years. So what else could and should governments be doing right now? Is it more contracts for difference? What is it they should do right now? And I could also, by the way, just frame it with, they are putting all these pledges now, the net zero pledges for COP26. So it would also be to tick that box.
Yeah.
Niels?
Yeah, maybe I can start. It's about investment. So, you need to invest, and we discussed it earlier today that you should electrify as much as possible, because that's the most efficient way of doing it, given that you have a renewable source, right? And the renewable, as we said, is an on and off, so therefore you need storage, batteries or hydrogen or thermal. So for me, it's about to invest in order to harvest. And this is what Norway has been doing with oil and gas. I showed the picture that is really going down. Maybe in 50 years it's zero. But in that time we have built up an enormous value and welfare in Norway. And if Norway as a company, if you call Norway as a company and not a state, then you will invest in the future in order to harvest. And that means that Norway, in that sense, should invest in new technology, in new ways, solving the energy and let's say the renewable equation together with the climate. So for me, this is how the politicians should look at it. So you need to invest because we need to harvest later on. If not, there's nothing to harvest.
Yeah. So Henriette, if I paraphrase, Siemens says we should electrify everything as the solution. What do you say from Equinor's perspective?
As much as possible, I said.
I'm only teasing,
But I think electrification is going to be one of the key solutions. And for our sake, we see now on the Norwegian continental shelf, we will be investing heavily now to decarbonize the production on the Norwegian continental shelf. And that is strongly supported by a high CO2 tax, which makes it a profitable solution. So that is one thing. And then I think if you look around and see what kind of CO2 tax do you really need in order to make the transitions in all sectors, we need to understand that. And we need to do that by sector and country by country. Also, all these net zero pledges, they need to come with a plan. And then if you see that, okay, the CO2 tax at this level, it's either not acceptable, maybe, for the transition, or maybe it's unrealistic, or you will have just bankruptcy of all your companies and you will just have it outsourced to other countries. So you need to do that balancing act. And if that's not the good measurement, the good incentive to make it happen, okay, then you have to look at other things. You have to look at, can you do contract for difference? Can you do CapEx support? And I think looking into at least the 3 value chains that I've been discussing today, they are quite different. And they will need different support regimes to be opened and helped. So we also need to make it flexible, but I think it's extremely important that we make them in a way that they put forward a competition so that the industry, different technologies, the different industry actors can compete in that space, because that is what drives innovation. That's what makes businesses good innovators, if they have an arena to compete and to improve themselves. So that would be one of the things. And then there are a couple of other things, except for just the risk relief mechanisms. There's also a huge need for area. For building renewable power unit.
Land area.
Land area.
Permitting.
Licenses,
Yeah.
permitting, all these processes, and both for CO2 storage, for offshore wind, that's going to be a huge issue. And also thinking very carefully and manage very carefully with all the different sectors, the co-sharing of area. Fisheries, oil and gas, offshore wind, transportation. There's a lot of things going out in the North Sea, and we need to manage that very carefully so we can avoid the big conflicts.
So if I summarize or paraphrase, it's a kind of carbon price with specific mechanisms on top to achieve, your 3 value chains, your 4 in a sense, because you have to include a supply chain for the equipment and so on. How does it look in the US? Because you don't have the carbon price, you've got the political system that you've got. What would or could or will, hopefully, unleash tens of billions more per year of clean energy investment in the US?
So I'll answer that by going back and answering the question you asked a moment ago in a slightly different way, and I agree with everything that's been said. I think that in order to attract or drive the investment that needs to occur. From a policy standpoint, what investors are looking for is some level of certainty, whatever that is. That certainty is a very complex set of issues which have been alluded to. But investors are looking for a risk-adjusted rate of return. So if you're looking at a sector or an industry that perhaps typically has relatively low levels of returns anyway, then if that sector is also high risk, that doesn't tend to pass a lot of investment metrics. So and you understand that combination very well. So then to take that statement and come back to the United States, yes, there needs to be more policy certainty, and within the U.S. There are discussions around federal policies for putting a price on carbon. Historically, they have not gained enough traction to actually come to fruition at the federal level. It's worth pointing out that there are regional pricing mechanisms within the states, but at the federal level, we are lacking that kind of universal price on carbon. Which, by the way, my company has advocated for a price on carbon for a number of years, and it's something that we believe fundamentally should be in place and would help to drive some of this investment that you've spoken to.
But if you listen to our European colleagues, they've been talking about 100 euros, $120 per ton, and in fact in the green room figures of 200 euros were mentioned. I mean, in a US context, that's just not going to happen, is it? I mean, anytime soon.
It will be a challenge. It will absolutely be a challenge to get something at that level through the U.S. Congress. That's not to say it couldn't be done. Typically, as you know, these policies tend to start with a low level initially, as the EU ETS did, and then ratchet up over time. So it's doable. It's a matter of getting it started.
Right. Now, we were joking in the green room about doing hydrogen bingo. The first person to mention the word hydrogen has to buy the drinks tonight. And actually, Niels, you already used it, but I think you got away with it.
You mentioned it before me.
Did I mention it? Well, you know me, I'm always happy to stand around. But hydrogen has come up repeatedly throughout the day, and I think we've all accepted that some level of hydrogen is needed in the system. One of the problems we've got, one of the reasons for the energy price crunch is there was lower wind output, and we don't have solutions for low wind output at night, that are cheap and affordable. Variable renewables have become cheap, but they don't work when they don't work. I've counted a lot of different policy mechanisms that you could use and that are being proposed for hydrogen. So subsidized R&D, renewable electricity being subsidized, subsidized electrolyzers, paying per unit of hydrogen output, subsidizing transportation, pipelines and distribution pipelines, subsidizing storage so that you could use hydrogen for long duration storage, but the state, of course, would be sent the bill, and that means the taxpayers. Fueling infrastructure for those that weren't persuaded by my ladder saying that we won't be doing transport. Subsidized fueling infrastructure is very popular amongst some people in Brussels, particularly, but not only. Subsidized capital allowances, accelerated write-offs, payment per unit of use instead of, instead of paying to produce hydrogen, you could pay people to use it. And then, of course, the famous carbon price that we spent quite a bit of time talking about. Now, it strikes me, of course, that if you get all 10 of those, there isn't an energy company in the world that wouldn't be excited about hydrogen. Am I being unfair? I'm looking at you, Arvid. You're smiling and laughing.
It's a strike. 10 in one. That is a strike. Now, of course, it is to start with where I think we will go. I'm sure that this will be a profitable business within a decade. I'm pretty sure that this will be a business that we all see as an important part of the energy transition. So how do we get there is really the question, because we are, as of today, most places when they put pieces together, as you showed here, it will be a deficit. It's red figures. So then, what does it take to bring it to positive figures? And for sure, I think that it's about scale. So how do we get fast to scale? Second, how do we develop technology? How do we get capex per unit down beyond what scale brings? And then thirdly, what is the market prices for the input and output of what you have? And for sure, a very high CO2 price will drive profitability earlier. But I think that we have to, when we look at, let's say, the tools here to get this going in the right way, we should really ensure that we use market mechanisms and create competition between companies and consortiums, and not really point that this is right and this is wrong. So some kind of, let's say, contract for difference system, competition for funds is really what we need to. But again, it will be different. Different countries may choose different paths, and I'm just saying that don't drag this into the picture that this is a continuous loss-making machine. I don't believe it. I think this is important.
But if you said contract for difference, I'm grappling for whether we should be, in a sense, supporting the supply side or the demand side or both. Right? I gave a long list, but it spans the value chain. And the contract for difference, as implemented in the UK for electricity, was a support for the production of clean electricity. It didn't tell you where you needed to use it. So when you say contract for difference for hydrogen, that would produce, whether it's green hydrogen or blue hydrogen, it would produce clean hydrogen. But would it make sure it was used?
Yeah, I think that is the same as with CO2 compensation. You only get it if you use it for the purpose it is meant for. For example, in aluminium, where you get this, the electricity you use for aluminium production, you get the CO2 compensation. So you can dedicate these kind of mechanisms for certain production.
Okay, so you do have to have, you have a contract for difference, but qualified for this. You get paid to produce, but only if it's used by the right use cases. Henrietta, do you want to comment on that?
I think it's a long list, and I think there's not one silver bullet solution. And for some value chains, I think it's going to be a combination. And for others, you can use one or a few. And I think it's important to also keep in mind what you're solving for, and make sure that you rig this in a way that you actually get the result. And if that is because you want a certain sector to use this type of energy, or if you want a certain volume of new electricity in, or if you want to develop a supply or industry. So you have to look, what are your targets? And that goes to, what is your pathway to net zero? And you have to link it back to that.
When you say, what are your targets? That approach, it does require a government or some central authority to say, this is how much hydrogen there will be in year X, amount Y. So there'll be a price signal, which I think we're saying is important, but the volume will be centrally planned. Is that right?
Yeah, at least I think what we have suggested earlier today is, for instance, that we need a real target for the volume of floating wind. Why do we need that? Yes, because if you do that within a certain time frame, he and I and the other suppliers, we will see project coming up at a certain time frame and schedule, which means that you have a pipeline and you can build your supply chain around that pipeline. It is a difference if you're building 3 fundaments for a floating wind farm or if you're building 200. You can organize yourself and you can invest differently in what kind of supply chain you build. And so if that is important, then I think a volume target will be necessary to give the signal that we will support this. It will be done with competition, but there is a pipeline.
Just on that one, I agree with you, but I think it's so important then to run several auctions through the years, so that you so that you get the benefit of innovation.
Absolutely, and it has to be predictable and come in.
So Niels can build his supply chain.
Yeah,
for sure.
Exactly.
Which you can't do on one auction, right?
No. So you need
By the way, I
pipeline.
accept that I took the word hydrogen first. Yeah, but you know, all of the above is what we are looking for, right, on all your checklist. But you know, we need hydrogen, as you said, but you know, for maybe some specific things, and to me, it's also about how do we actually control that supply chain, because maybe it can be produced more cheap other places in the world, but then how can we actually ensure that we have that availability if there are scarcity of resources? And you know, if you go back when Statoil and the oil and gas industry was started in Norway, we could do that in different ways. But in Norway, we selected to do it in one particular way, which means to build up a demanding customer asking for top quality producers, or let's say technical companies, in order to deliver in this. And this is what we're hunting for.
Right.
I think that is also part of the Norwegian culture and the Norwegian policy, to actually have control of this in a way, because it's so important resource for us.
Right. Yeah. Although it's not just a Norwegian culture. We've already heard, Xavier, you're talking about the rice bowl of security has to be in your hands. And of course, you know, I'm to a certain extent teasing, saying, isn't that central planning when you decide how much hydrogen is going to be produced? Does that play to the advantages of an economy, and a political economy like China, where people are quite relaxed about having a 5-year plan? It's not regarded as an odd or unusual thing, the opposite.
I would like to comment on this electricity and hydrogen from my perspective, looking from Asia. I do not subscribe to the thesis that the future will be all electric, because the energy system provides both energy but also material. When we do whatever project, there is an energy balance and a matter balance. And this oil and gas will stay with us for future because of material needs. Yeah? Unless we become robots, we can be fed and then move with electricity. So long as humans live in this earth, we need oil and gas. So oil and gas is an evergreen industry. I do not work for any oil and gas company anymore, but I worked for BP and Statoil. I know this is very important. So that's the first point. Second point is hydrogen. You know, we talk about hydrogen from renewable energy. That means hydrogen for electricity, right? So then what's the use of hydrogen? Hydrogen, you can burn it or you can use a fuel cell. I believe that the whole European Union has not studied carefully yet about the hydrogen. You know, so supply chain, first of all, you produce hydrogen, you need the nickel, you know, the electrolyzer, and the fuel cell need a lot of expensive metals, rare earths. When we have that scale, where do we secure supply and this rare earth? You say everything from the sky? No, everything still needs to be extracted from the earth, and it's an energy-intensive process, and there's limits for that. Have you studied that? Second, you know, if you say hydrogen pipeline transport and then for combustion, doesn't work, Michael. If hydrogen is a very, very small molecule, even the metal box cannot contain it. So mixed with pipeline, it's only 5% people are trying. 10%, there are some limits. Can you really transport it? Can you store it? And then if you put into the tanks, for the cars, can you ensure me that over 10, 20 years time, there is no leak in the garage underground?
I'm just going to put it, I'll tell you why, because that was what we were joking about, the hydrogen bingo, because hydrogen steals conversations. That's one of its properties. And so I want to come back, and also there are some things there that you said that we'll talk about over that drink that Niels is going to buy us, hydrogen round. Because we're talking about how to make that business profitable. And I agree, there are, from my presentation, I think there are lots of unanswered questions. And I want to come to, so the central planning element of somebody has to just say, we can have a price signal or we can have a volume signal, but we can't do this profitably without one of those. And the US is, of course, not known for its central plans, except for things like renewable portfolio standards, which actually worked quite well, did they not?
They seem to have, yes. They've certainly...
I'll phrase the question, if I might. Sorry to interrupt. I'd phrase it as, what would get ConocoPhillips to produce a lot of clean hydrogen? What mechanism would you look for?
So the first thing we're looking at, and we do have a low carbon team that has been stood up to examine issues such as this, and hydrogen, the area of hydrogen is something that is on the table. For us, the way we're thinking about low carbon is to first consider what are the lines of business that would make sense for us given what we do today. So we're not necessarily at the point that we're going to venture off into a completely new line of business. At the present time, we're not getting an indication from our investors that that's what they would like us to do. So for us, it's more about what is the bolt-on type of line of business. And insofar as looking at hydrogen, I can't say anything specific regarding that other than we would be looking at opportunities and seeing what would make sense for us given the businesses that we're currently engaged in.
Okay, and it slightly perhaps comes back to this question of a carbon price, and if your customers started asking for it because there was a carbon price or something similar. I got two more questions I want to cover, and we have relatively limited time left. The first one is a quick one, I think maybe. Is part of the solution here to go back to investors, and of course, Henriette, I'm looking at you because your investor is all around us, it's partly the Norwegian government and people. Will they have to accept lower returns through this transition, right? You started off by saying this early days, and Arvid, you said, this was a phase we have to go through. Do we go through a phase of low returns and hope that they come back up, or are there no trade-offs here?
I think what we obviously will have to do is go to a period of heavy investments in order to enable the future returns. And I think trying to predict returns in the future, it's not an easy business, but I think what we will see, it's heavy reinvestments into new value chains in order to lift them.
Okay, so dividends perhaps hard to pay on the historic scale for some period. That's not a trying to trick Equinor question, it's a special question.
No, but I think you're right. I mean, it's about to do these investments. It's not necessarily that the profit over time is reducing, but you have to do these heavy investments. So.
But that then leads on perfectly into my final question, which is, how do we bring society along with this? Because what have we talked about here? We've talked about potentially higher costs, much more state involvement, and potentially the dividends that have been paying their pensions and their welfare, particularly, it's a really important question here in Norway, could not be more important. How do we make sure that we bring people along with us? And of course, there's a variant. In Norway, it might be around keeping lush pensions, but in other parts of Europe, it's about yellow vest protests. In the US, it's about incredible polarization. And in China, some questions about legitimacy and also social unrest, potentially, if you get it wrong. So how does it, what has to happen to make sure that all of society agrees with you here on the panel today? Xavier, I'm going to start with you.
I would say everybody loves innovation. Everybody want to do innovation. So innovation holds the key. So if we want to get the whole society on board, encourage everybody to think about the new business model, that they do not lose out. You can, not only the technology innovation, but also government policy innovation. Companies will try out different models, business model innovation, and then rapidly scale up for everybody to participate in the process. But so far, I think in the Chinese case is that government mobilization to allow everybody to participate. So that's important because the economic model, business model is not yet in place, and then only the visible hand play a very important role.
Okay, so innovation, sell the vision, sell the future, and keep everybody on board. Does somebody want to come in? We've only got time really for one more contribution.
8 seconds left.
Okay, rapid fire, 1, 2, 3, but it'll have to be very quick, otherwise Sophie's going to get me.
We have to present a wake-up call to the politicians. And the reason is that we tend to talk about the targets, but not the gaps.
Okay.
And this is the important thing. And they need to be open, as I said, to sell it to the society, to our people, so that they actually get the support for it.
Honesty and talk about what really has to happen from the politicians.
Talk about the problems,
And the other?
And we have to be very clear that we are trying to solve a shared challenge. We are solving for climate change. That's what we're solving for.
Okay.
So we need to go in that direction.
So we've had innovation. We need solidarity around the climate action and what that would do to the vulnerable people. Okay, Arvid, and then I will come to you just to finish off.
I can just subscribe to what this is.
Subscribe. Okay, so you just say what Henrietta said, and Niels. Very good. And then our final word.
I'm going to end on a very different note. I think all of these goals are laudable, and we can pursue them. But I think we should also keep in mind that the task is very tall, and getting a global coalition is something that has never been done. What it results in is the energy transition is likely to be volatile and messy. That shouldn't intimidate us. We are still going forward with it, but I think we just need to recognize that reality of volatility and some dislocations or potential disruptions along the way, and be prepared for it.
Very good. Well, I'm not going to even try to to summarize this conversation with these extraordinary panelists. I think that's an excellent final comment from Helen, saying it's going to be messy, it's going to be complicated, and we're going to do it anyway. And with that, I'm going to ask you to thank our panel and hand back to Sophie.